Gold hitting a record high this morning, touching $2,100, but since pulling back. But there's another rally on the horizon as geopolitical uncertainty continues and investors bet on future rate cuts. Mike McGlone, Bloomberg Intelligence Senior Macro Strategist, joins us now. Good morning. Thank you for joining us. So for people who are trying to get a handle on the correlation between what we've seen with gold prices historically and the S&P 500 here, what does that lay out about the path ahead recession-wise?
Gold up, S&P 500 down, I think is a potential trajectory for next year. The key thing right now is gold's just kind of frustrating to most people, made a new high. And then we, basically last night at $2,135 an ounce. And now it's just trying to see if it can hold that support around $2,000 an ounce. That used to be resistance. I think it will. But I think you mentioned the key factor is if the stock market keeps going up and U.S. interest rates stay high, and there's not a lot of reason for gold, but I think that's all transitioning. Now, one of the things today is the market's price for a lot of Feds next year, Fed fund futures, so almost 100 basis points by this time next year, which might be more an issue for the stock market. But the way I see gold is the deepest pockets on the planet are buying gold. That's central banks. Now, ETFs haven't really been much buyers, but I think gold is in the early days of a bull market breaking out to new highs and just frustrating some people by not continuing.
Mike, we often sort of simplify the gold trade by talking about it being a safe haven. What's different about this rally that we have seen? It certainly feels like it's got more legs to run.
Well, what's different specifically today is there's the digital alternative. I'm not surprised gold's knocking around and driving people crazy around $2,000 an ounce. It's been doing that for 3 years. But it's the fact that despite the stock market being down, digital gold, Bitcoin is up a lot today. So I think it sticks with my narrative that this is not our father's gold market. You really can't hold gold anymore or have interest in gold without some Bitcoin in that space because it's better fit for the world going digital. So I'm bullish gold. I'm less bullish Bitcoin if the stock market goes down, but it's proving divergent strength. So to me, that's the key thing that's different is that there's that alternative in digital gold.
And so, Mike, how would you compare gold versus other commodities that you have your eye on heading into 2024?
A good assessment. It's a significant recessionary trajectory. So virtually all commodities going down, industrial metals 15% or so, energy commodities down almost 20%, grains down almost 20%, and gold going a clear recessionary trajectory from commodities. The key question is, does something stop it or does it accelerate next year? In my bias, it's going to accelerate. We have issues. We see what's happening in China, potentially recession already in Europe, U.S. tilting towards recession. We look at leading economic indicators and Bloomberg Intelligence. Yet it was only a few months ago, most central banks were still tightening. So to me, that's the recessionary trajectory from more of an adult, less speculative market, which might be industrial metals, versus the U.S. stock market. This might be going up on hopium and for cuts, federal rate cuts, which Fed has told us, the chair policy is they're not going to be cutting rates anytime soon, at least not in, I think, the way the market's expecting them to.
So we're looking at spot prices right now, Mike, off of that $2,100 high that we saw. How much further do you think it goes? Or how much higher do you think it goes?
I think gold's going to be heading towards 3,000. It's a question of when. I think it looks to me very similar like it did when it leaped and had that issue of 2008. It bumped up against 1,000. It dropped to around 700, and then it leaped at 1,900. I think it's doing something similar. So to me, the key thing right now is how can it hold support around 2,000? That's kind of the new support transitioning from old resistance. And right now, it's just frustrating the most. But I fully expect it to head towards 3,000 and maybe even next year. But remember, the deepest pockets on the planet are buying, central banks. They still are. ETF buyers might flip, but I think it's going to take higher prices for what's been selling at ETFs, which is very rare, for them to start flipping towards positive in gold.
So, Mike, for people who are new to perhaps investing in gold, not sure how it fits into a portfolio, how should they be thinking about it as an investment?
Well, it's easy to invest in gold through ETFs now. I think you look at gold as the base layer of money on the planet. So if you look at like the S&P 500 and divide by gold, I think it's about the same as 1997. If you compare it to land prices, It's a very stable measure. It's not affected by the massive pump in liquidity we basically saw from 2000 to 2022. So I look at gold as that's a stable measure. And the key thing that's happening right now is that if you look at the price of gold since we came off the gold standard in 1981, it's the per ounce price has basically fluctuated between above the S&P 500 and well below the S&P 500. And every time it's been at a significant, the level of the S&P 500, the per ounce price of gold, and we have a recession, gold just kind of catches up. So that's why I'm using that 3,000 level. Gold just typically catches up. So you look at equities, historically a little expensive, and gold historically a little cheap versus S&P 500, particularly for a U.S. recession.
Okay, $3,000. We're going to mark that one, Mike. See if you can, we'll have you back on the show, maybe if it tracks in that direction. Mike McGlone, Bloomberg Intelligence Senior Macro Strategist. Good to talk to you today.